Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, April 7th. First of all, we need to discuss new trading hours. The CME announced that new trading hours will begin starting tonight. Those new hours will be as follows. Instead of opening at 5 o'clock at night, grain trading will open 2 hours later at 7 o'clock at night. That will be the new starting time each night, Sunday through Thursday. They've also added a break in trading that will be from 7:45 in the morning till 8:30 in the morning. So we start tonight at 7 o'clock, we go till 7:45 tomorrow morning, then we have a 45-minute break from 7:45 until 8:30. At 8:30 grain trading will resume and then continue until 1:15 when the grain markets will close, which is 45 minutes earlier than we've been closing before. Be sure to check with your broker on that break period from 7:45 in the morning till 8:30 in the morning so that you fully understand during that break period what you're allowed to do with orders, whether you're allowed to cancel them, modify them, or enter new orders. Be sure to talk with your broker if you are involved with entering orders electronically. As far as tonight is concerned, I think we're looking at more of a firmer tone. I think there are several reasons for that to be the case. As far as weather is concerned, it's a little drier than desired in about the southwestern third or maybe even up to a half of the U.S. hard red winter wheat area in the plains. There's been some rains in the plains, but they've missed quite a bit of the southwestern areas. Even the forecast, which has some moisture in it for the plains, still does not favor the southwestern third of the hard red winter wheat area. As far as the Midwest is concerned, there's beneficial moisture in the forecast. I say beneficial from a soil moisture perspective, but from a timeliness of planting issue, that moisture in the forecast is also elevating anxiety among traders in terms of planting delays. We're significantly different than we were last year, which is what people remember. Historically, I'm not sure it's that big of a deal yet, but the marketplace is not going to wait until it becomes a big deal before they begin to talk about it. So I think the corn market will be firm based on that. The corn market may also be firm because Wednesday we have a USDA monthly supply and demand estimate, and while the stocks report was certainly bearish, I think people realize that we're probably not going to add all of those found bushels right to the bottom line carryout. So that probably see some short covering by the trade going into that report. Technical conditions are supportive. They're oversold. We liquidated the corn market $1. Every bullish position that you could imagine was under attack, whether it was a flat price bullish position. Old new spreads were annihilated. Charts were destroyed. Intermarket spreads that use corn as a long leg, they were destroyed. Everything that was under attack that was a bullish corn position since that stocks report. But with the prices dropping more than $1 since that report and everything else under a rapid and broad liquidation flush, the market has very quickly become thorough and clean with this liquidation activity. So I think you're looking at some sort of a snapback recovery, technical-based price action led by corn here beginning tonight and this week. And I think that when you look at beans, you don't really have a weather storyline here. You've got technical conditions that are oversold, certainly due for some sort of corrective bounce. Cash markets are strong in all of these markets, which will provide a supportive tone. But I think that what you really need to do is you just need to step back and say, you know what, the market has done a lot since that stocks report. It's liquidated a lot. That pressure is over. And I think you're dealing with a situation where we're looking at the bottom side of parameters probably going into at least mid-June, maybe beyond. And we're going to get some sort of a corrective rally from here. And I think the odds are that pretty good that we can get a better rally over the next several weeks than what the current sentiment seems to suggest. To be able to return wheat, corn, or beans to pre-report levels is not an unreasonable possibility, and I think it's a fairly decent possibility that it will happen. I think there's a relatively good probability that that type of recovery can happen. So I think that's what you look at for tonight. Look for limited downside potential tonight or this week in general. Look at better recovery potential during the next several weeks than what most are talking about right now. And I think that there are reasons to be optimistic and expect some better pricing opportunities ahead. For the DPP Grain Desk, this has been Duane Lowry. Thank you.